Welcome to Equity and Ag, your daily recap of the stock market and agricultural futures markets. Let's break down what moved the markets today. Corn futures moved lower to start the week, pressured mainly by weakness in outside markets, especially a sharp sell-off in energy prices. March corn closed at 4.25 3/4, down 2.5 cents, while May corn finished at 4.33 down 2.25 cents. Technically, the March contract failed to hold above the 20-day moving average near 4.30 last week and slid back toward trendline support around 4.25, which held on Monday. A break below that level would open the door to a retest of mid-January lows below 4.20. From a positioning standpoint, the latest commitments of traders report showed non-commercial traders holding a net short position of just over 30,000 corn contracts as of January 27th. On the demand side, export inspections continue to slow, although total commitments remain about 50% ahead of the same point last year. That pace has cooled from earlier in the marketing year after an extremely strong first quarter. Later today, USDA will release the grain crushings report, which will show December corn usage for ethanol. Expectations are for a strong month, with usage near 480 million bushels. Soybean futures also finished lower, marking a third straight session of declines. March soybeans closed at 10.60 down 4 cents, while May beans settled at 10.72 down 4.5 cents. The soybean market was pressured by the broader energy market sell-off and a fast start to harvest in central Brazil. Despite the losses, March futures found support near the 20-day moving average around 10.60 and bounced off the lows, finishing 8 cents above the session low. In the short term, the next upside target for soybeans sits near the 100-day moving average just above $10.80. Speculative positioning remains supportive, with non-commercial traders still holding a net long position of about 57,000 soybean contracts as of January 27th. Export inspections for the week totaled 48.2 million bushels, slightly below the previous week, but above last year. Overall inspections remain 36% behind last year, though that gap has narrowed steadily over the past month. USDA will also release its fats and oils report later today. Based on NOPA data, total December soybean crush is expected near 230 million bushels, with traders also watching for higher soybean oil stocks. Wheat markets pulled back to start the week, largely due to profit-taking and a firmer US dollar. March Kansas City wheat fell 9.5 cents to close at 5.35 1/4. Chicago and Minneapolis wheat futures also finished lower. Support for the March KC contract is seen in the 5.25 to 5.30 range, where several major moving averages are clustered. Resistance remains near 5.50, which aligns with the 200-day moving average. Wheat export inspections totaled 12 million bushels for the week, down from the prior week. Even so, total inspections remain about 19% ahead of last year, holding steady through January. Weather risks for US winter wheat appear limited for now, with above normal temperatures forecast across much of the country into mid-February. USDA will release updated crop condition ratings on Wednesday, which could provide further insight following January's cold spell. In the cattle market, futures finished sharply higher. Today's slaughter totaled 108,000 head, which was 8,000 more than last week, but 5,000 fewer than a year ago. Friday's slaughter was revised down to 90,000 head, bringing last week's total to 528,000 head. Live cattle futures closed sharply higher, gaining between 232 and 292 points, while feeder cattle surged higher, up 362 to 590. Beef cutout values are expected to finish higher as well, supported by light to moderate box movement. Thanks for watching Equity and Ag, and we'll continue tracking the key market drivers as the week unfolds. The content on this channel is for informational and educational purposes only and should not be considered financial, investment, or trading advice. Always do your own research and consult a qualified financial professional before making any investment decisions. Investing involves risk, including the potential loss of principal